Hey you, welcome to today's backtest. So our backtest is going to be on gold on this candle right here, it's 24th of February, which was yesterday. Now, price has finally drawn into this 4-hour CB, like I discussed on the last backtest. Let's go to the 4-hour shots. See, this 4-hour CB. Okay, price finally rallied into it. And price rallied into the CB on the 23rd. Okay, and then a volume imbalance was formed below price. You can see this volume imbalance. Volume imbalance is the gap between the body of two different candles. So this is the body of this candle and the body of this candle. You can see the gap between the two bodies. The body for candle formed at 20th of February and the candle formed at 23rd of February. Okay, you can see the gap. And also, this is also a new week open gap. Okay, this is a new week open gap, and I made a backtest video for new week open gap and new day open gap on the 17th, the backtest for 17th of February. You can go and check that out. So it's a new week open gap in the sense that this is a candle formed on Friday, okay, and after Friday, the the market closes on Friday at 4 p.m. and reopens on Sunday, okay. Then the candle formation starts on Monday, okay. So the candle closes and reopens, closes on Friday and reopens, and during that space in time, during that time period, there is no trading activity going on, okay. So hence the gap, okay, and this is labeled new week open gap because it is formed during the week, okay, during the close of markets, during the week and the weekends. And also this is also a volume imbalance, okay, since there's a gap between the body of this candle and this candle. Now, after on the third, whereby market rallied up into the 4-hour CB, this bullish, this up close candle right here, okay, this is actually the daily chart. So the next candle, that was on the 24th, you can see price ran down into this volume imbalance and also into the new week opening gap, into the new week opening gap, and then rallied upward back into the 4-hour CB. So let's get into it and see how this played out. So going to the 4-hour time frame, okay, you can still see the volume imbalance. Okay, it's still very visible right here on the 4-hour time frame. And price running down into it and rallying up. Okay, rallying up here on the 4-hour chart above price. You can see an order block. You see this up close candle right here, followed by this down close candle. Okay, order block is a change in state of delivery in price. So buy side delivery being offered at this up close candle, then sell side delivery being offered right here. So the moment this down close candle trades below the open of this up close candle or the low of this up close candle, it validates it as an order block. Okay, now you see price trading up to the order block and respecting the order block. Let me draw the line out. See price respecting the order block after trading into this volume imbalance slash new week open gap and trading up into this other block. You can see it's staying respecting this level of the other block. And also below the other block is a gap. It's a CB. Okay. This is a CB, sell side imbalance, buy side inefficiency. So this is how it looks. So this is how this CB looks on the 4-hour time frame. And you see price, you see body of the candle respecting this level as well. While the wick of the candle trading into this other block, which I highlighted with the red line. Now dropping down into the 1-hour time frame. Okay. Now it's becoming more clear. Okay. So why price traded down into this volume imbalance, which is still visible at the 1 hour time frame. Okay, you can see a low being created. Okay, this low was created on the 23rd of February during the London session. Okay, so on the 24th of February at the New York AM session, price traded. Why price was trading into this volume imbalance? Okay, it took out this low. Okay, this low. So let's bring it out. So now we know price took out this low on the London session, which is visible on the 1 hour time frame. But on the 4 hour time frame, I guess you can't see any. Okay, we can see it. It's a wick. On the 4 hour time frame, you can see this is a wick. Okay, it was formed as a wick. But on the daily time frame, you can't really see a low being taken out. Okay. On the 4 hour time frame, it's a wick, and on the 1 hour time frame, it's very visible. And we can tell it was formed during the London AM session before the rally up. And also on the 1 hour time frame, that's other block on the 4 hour time frame looks. Okay, so buy side delivery being offered. These three up close consecutive candles, 1, 2, 3, then followed by this down close candle, change the state of delivery in price. So this is how it's going to look on the 1 hour time frame. So I'm trying to do a top down analysis. Okay, so this will be very clear. There is that other block. And let me take this off this 4 hour CB. And this is a smaller CB, okay, formed on the 1 hour time frame. And this is how it's going to look. So the low of this candle and the high of this green candle right here, this bullish up close candle. And see price traded into that level and respecting it. Now dropping down into the 15-minute time frame. Okay, on the 15-minute time frame, okay, the volume imbalance is still visible. The low is becoming more visible. Okay, this low is becoming more visible, and we can see we can see more details in price. You can see more details in price. So let me make this black. This is Tuesday first presented fair value gap. Let me take this off. So okay, I think red is better. So why price traded into this is 15-minute time frame. Why price traded into this the volume imbalance slash the new week opening gap. It's rallied up, okay, with displacements, creating a gap right here. These are these gap looks. Let me this yellow. Okay, and you see price respecting this gap. Okay, after trading down into it, filling it up, it rallied up, and another block was formed. Where was the other block formed? Okay, this is the down close candle, and you see why price traded down into this fair value gap created. It's rallied up, okay, forming up close candles. Okay, so the moment this up close candle trades above the open of this down close candle, it validates this down close candle as a bullish order block. So this is a bullish order block. I will annotate this green, the green line. Okay, now you see how price traded down into this other block and respecting it. Okay, this down close candle right here, respecting this level and it rallied up once more. Another order block was created where this down close candle, then followed by this up close candles. Okay, so the moment this up close candle trades above the open of this down close candle, it validates it as an order block as well. So price didn't trade down into the other block. Okay, this is how it should look. In this case, price didn't trade down to the other block. Instead, price traded down into this fair value gap on the 15-minute time frame. So these are the fair value gap is going to look. Okay. After trading down into this fair value gap, it traded up, took out this high right here, taking out buy side. And I was on this trade, actually, I was on this trade. I entered on this other block right here. I entered on this other block and my stop loss was on this low. Okay. And my take profit was for price to take out this high, not for price to even rally up to this CD, this inefficiency. Okay, my target was for just was for price to just take out these highs. Okay, because they are relative equal highs right here, and they are buys to stop buy side liquidity resting above these highs. So this was my target for yesterday. And why price rallied up to this point, okay, it was close to the market close, and I didn't want to leave my trade open overnight. Okay, so I placed my trade on the break even at this point, and when I noticed price was okay, when I noticed that the market was about to close, I took my profits at this high right here. Okay, thinking maybe okay during the London session for today, price is going to create a chance to rally up further. Okay, but here's what happened. Price traded down back into this level. Okay, back into this other block right here. Price traded down into this other block right here. And if I haven't taken my trade off, price would have stopped me out on this run on break even. Okay, price would have stopped me out on break even. So another thing I could have done, okay, another way I could have head on to this trade was that okay, let's say price was at this level, I could have taken profits, a partial of the trade, then I'll leave my stop loss in place, okay, then watch if price would rally up to my take profits, just as price has did. Okay, but I'm still satisfied with closing my trade at this level right here. Okay, it's not a bad trade. So, like I said, I was okay since the market close was just by the corner. I had to close the trade, and when I saw this drop down in price, okay, I thought price was going to create something during the London session for me to during this London session, okay, for me to buy to for price to take out this high and maybe run up into this CB. But price ran up into the CB anyway during the Asian session, okay, before the open of 25th of February, which is today. So let's go into the 5 minute time frame, then call it a day. Okay, this is how it looks on the 5 minute time frame. Okay, so on the 5 minute time frame, this is that other block I showed you on the 15-minute time frame. Okay, you can see up to four consecutive down close candles, then followed by these up close candles. Okay, you can see price trading into this other block multiple times. One, two, three. Before this rally up in price, let me take this off. Okay, and also this is that second other block. This down close candle followed by these up close candles. But price didn't trade down into the other block. Instead, price made use of the fair value gap. Okay, so there are so many fair value gaps in price, but this is the main one price made use of. Okay, so price traded into it twice. before rallying up to take out buy stops from this high, and before the rundown in price and market close. Then this gap right here, this is the new day opening gap. Okay, this is the new day open gap. So like I said, for each day at 4 p.m. the the market closes at 4 p.m. It closes at 4 p.m. and reopens at 6 p.m. Okay, so I have an indicator which would highlight the line for the new day open gap, and this is how it looks. Okay, this is how it looks. And I made a separate video, like I said, for the new day and the new week open gap and the characteristics of it. You see how price respects it here. Okay, after this gap up, it trades down into this gap and respecting this opening gap, okay, this new day opening gap, and it uses it as support to bounce up. Okay, so I made a separate video for the new day open gap and the new week open gap. It's on the backtest for the 17th of February, so you can check that out. And on the 5 minute time frame, you can see, okay, after trading down into this other block once more, after the market closes, it bounce up into the CB, which is visible at the 1 hour time frame and the 4 hour time frame. And this is the Monday first presented favor value gap. Like I said, I extend mine all through the week, and you see how price respects this level. Okay, this is not random. Also at this point, you see how price respects this level. Okay, the wicks can can overlap. Okay, but you see the body of the candle trying to stay at this level. Okay, this is not random as well. So if you find this insightful, drop a like, subscribe. I know you found it insightful, and also share to someone who may need it. So until next time, have a productive week.